Let's get some more on what to expect from the local market today. Evan Lucas joining us from IG. Evan, great to see you as always. Yeah, obviously a big day ahead with some Chinese data and then, of course, the federal budget out tonight. Got to ask you, though, I mean, a broad rally on global equities, fresh records for the Dow and the S&P 500, mining stocks really leading the way. What do you think for our market?
Yeah, look, last night over in the US was a good thing to see. Those momentum, and particularly those high-price momentum stocks, had a bit of a rally. There wasn't a huge amount of macro news to really drive it. And if you also have a look at the currencies, they didn't change much at all. I think what the most important thing from an Asian-centric and particularly an Australian-centric point of view is something that came out of China on Friday night, and that came out from the State Council of China. And they've titled the paper called Guiding Principles for the Healthy Development of Capital Markets. And this is a very, very interesting step forward in China towards those really liberal markets that we want to see, stuff that came out of the third plenum in October, November last year. And it's all about 9 key areas in China and basically overall requirements for the stock market, for the bond market, futures market. They want comprehensiveness in securities in the futures sector, openness in the capital markets. All of these kind of policies they now want to implement, and that is a huge change with regards to what we see in terms of their forward guidance. And the reason it's so important, again, from an Australian-centric point of view, is that it has 4 implications, and that basically puts China leaping forward into the liberalisation of open border markets. So the tie-up they've got with Hong Kong will get stronger. There's also now a real chance that they will establish and develop a more domestic/open renminbi exchange rate, and that means permitting cross-border implementation of offshore banks to actually put borrowing, lending, etc. in renminbi, and that's a huge development in terms of what's happening. And it's why you've seen last night a really big move in the commodity space, particularly things like copper. Copper is always referred to, particularly by Carson Scott, as Dr. Copper, and it is a very good implication of where the markets see China going if this liberalisation does come to a head. And that's why yesterday, if you have a look at the Chinese-led markets, they were the real big driver. All of them jumped 2% or a bit more. And the Australian market, although it started really weakly in the morning, came back quite nicely in the afternoon. And we should continue to go further forward as China really comes out with that. So that's what we saw as the real big interesting development, is that they are now taking real strong steps towards a liberal, fully layered, fully capitalised market on the Chinese side of the mainland.
Just in terms of, you know, what happens next in equities, I mean, do you see perhaps some momentum now to the upside after this rally? Do you think it's got legs?
Yeah, possibly, and I certainly do think that it is there. There is no doubt, if you want to look at the Australian side of it, there is legs behind it. You can still see that there is support, even with, you know, the downward sort of trending idea that we've seen, and possibly tonight with the budget, you know, a bit of a fiscal drag that will come about. The stocks are still supported. If you have a look even at the ones that are under pressure, which has been the material side, they continue to bounce. The banks, although they're about to go ex-dividend, so it'll be interesting to watch. ANZ has started to sort of tick back after going ex-dividend, which is a sign of strength is there as well. You can also sort of look something like Woolworths and Wesfarmers that continue to slightly disappoint on the headline analyst numbers, but continue to see support from the market side. So there is certainly legs there. There is certainly momentum behind it. I think the mid-cap space is the interesting place to watch, because they're the ones that are still lacking the kind of capital that we're seeing at the big end of town. And if that returns, that's when you really will see a bit of a change. But again, tonight's budget will be interesting, and that's why I think today's Australian numbers will be interesting. Home loans are coming out around about 11:30. It'll be the last time we actually see a figure before the budget sort of really starts to take effect, and it is expected to contract by around about 1.5%. And I think retail sales are the other side of the equation. If we do see the kind of levies that have been leaked, so the deficit levies, that will be the other space to watch very closely, because less spending money in people's pockets, it may also sort of hit consumer spending. So there is possibly a fiscal rockiness coming, but then the other side of the equation is the bets that come in the Aussie dollar and the monetary policy side. Does this mean the RBA will hold rates for a longer period of time than they're already stating, which is towards the back end of the year? And does that sort of current situation of rate hikes end of this year, start of next year, start to affect as those tax hikes that are coming, whatever you want to call them, a levy, what have you, do start to rein in that sort of current sort of heat that people are suggesting, which is in consumer spending, consumer confidence, and also home loan lending, etc.
So just turning to the data too, because obviously that could, you know, sway the market as well today, couldn't it? I mean, we get locally some housing data and a slew of data out of China as well. What are we expecting?
I think the industrial production number, if you want to look at the China data first, is probably the key one. It is expected to hold true at around about 8.9% year-on-year growth. Now, that seems reasonable from a point of view of an Australian-centric point of view, but from China, that is the lowest level we've seen since August 2012, and then from before that, you have to go back to 2002 to see that kind of growth. So China is still slowing, there's no doubt about that. The question is what happened on Friday, as I alluded to at the start of this, with regards to that liberalisation of capital markets can offset the possible current short-term, even interim headline numbers that we're seeing. The other one, fixed asset investment, is always interestingly watched. There is always talk about overheating in the lending side, particularly on that sort of home investment in China as well. So those two are the ones to watch. I think they will hold true, and you may actually see a bit of a rally. I feel there's a bit of a chance of a turnaround in China at the moment. For that reason, that might be good. Looking, as I said already, to the Australian numbers, it's the home loan lending year-on-year amounts that we'll be watching. And as I said, the March numbers are expected to contract. So that may be a little bit of a downer. And again, the budget tonight will probably see most of the currency markets holding true on an Aussie dollar pair side, because expectations tonight are looking like a fiscal drag, and that may be a negative on the Aussie dollar side.
Evan, thank you so much for that. Evan Lucas there from IG.